Hey gang, Dean Hansen here with Farmers Insurance right here in Allen. We're a family-owned business, and my wife and son work with me. There are 6 of us all together, and we're fully licensed insurance agents. So all of us are able to help you when you call our agency and you need some help with your insurance. I wanted to go over a few basic questions that a lot of people ask about car insurance and kind of to tell you a little bit about how is it that you purchase the right insurance for your scenario, your situation. And then how does the insurance work if there's a problem, like a claim? How do you do that? And I just wanted to explain some basic things. Now, as the presentation says there on this first slide, it's not designed to be all-encompassing. I can't give you all the information that I know about insurance in just this short 4-hour presentation. Just kidding. We're only going to be a few minutes. But there's more information available on the last slide. Our phone number is right there. Give us a call and ask us any questions that you've got. Also, our website is there as well, so you can go to the website and learn a lot on our website. So thanks for joining us today. So insurance is all about, many parts of it are about liability. And as you can see on the slide here, the state of being responsible for something, especially by law. So if you could say that you're at fault, then that means that you're liable. You're responsible for fixing the problem as well. And this is one of the main reasons for auto insurance in the first place. And there are 2 parts of this auto policy liability. There's if you have bodily injuries and if you have property damage. And so those are the 2 different liability portions of the auto policy, which we're going to talk about today while we're together. So if you're responsible for an auto accident, and that could be that you crashed into another car, could be that you crashed into a fence or a house or a person. So it could crash into several cars. One person could be injured. Maybe nobody's injured. Maybe many people are injured. Sometimes in car accidents, people die. So these are the things that we all have to be prepared for here at our agency to handle. And we try to help our clients to set up their insurance in advance so that they have the right tools available within their policy to help them when things go wrong. That is one of the main things about insurance, is that there are limits and you get to pick them up front. And then this insurance has to be in force, in effect, already bought for, and you already have the contract before the damage occurs. You can't get in a car accident and then go get insurance to cover a problem that happened in the past. It doesn't work like that. So with insurance, it has to be set up in advance. And here are some examples here: medical bills related to the other person's injuries, and then repairs to the other person or person's vehicle or vehicles, and physical damage to any other property. Like I said, a fence or a house, anything, a bridge, that, something you crashed into with the car. And here are some examples here. Car accidents can get very expensive. And it's a common question that people ask me. Wow, why is car insurance so expensive? Why do I have to pay so much money just to be able to drive my car? Well, it's because some of these things can be very expensive to fix. If there's a car accident and someone's injured, then an ambulance will come and take them to the emergency room. There could be surgery, medication, hospital stay, recovery, physical therapy, time off work, pain and suffering. There could be a funeral. There could be a death benefit that needs to be paid to their family. Those things can be very expensive. And then on the other side, the physical damage or property damage part, the towing, the body shop repairs, the rental car, someone may want to get paid depreciation because since their car was in a car accident, it's going to show up on that Carfax you've heard about when you go shop for a car. So let me give you an example about that. Let's say, for instance, that you own a car and it's in good shape and it has good miles and it has great equipment on it, and you've discovered that you could probably sell it for about $10,000 or trade it in or whatever, but it's worth $10,000 in some way, shape, or form. And let's pretend that your friend has exactly the same car, same color, same exact miles, right down to the last digit, same exact equipment, same exact condition. Everything's exactly the same, except that car has been in 2 car accidents and it's been repaired, but it's been in 2 car accidents. Which car do you think is going to sell for more money? Which car would you want to buy? Which car would you pay more money for? Well, obviously the car that has had the damage is going to be worth less, and that's called depreciation. So the person whose car was damaged, they may say, hey, thanks for fixing my car, but when I go to sell it, it's going to be worth a diminished value, is what we call that, a decreased value, a depreciation, because of the fact that it was in an accident. Even if it has been fixed, sometimes people know that sometimes the repairs aren't perfect, and you can tell. And so someone would want to purchase a vehicle that with no accidents versus one with an accident. And then sometimes vehicles are not repairable, or the cost would be so great to repair the car, it wouldn't be worth fixing. So that's called a total loss. And we may have to pay for that in an auto insurance policy claim. So those are the different costs that you could wind up having. And all of this revolves around a concept called indemnity. And it's pretty much compensation for damage or loss sustained, just like the slide says right there. It's designed to get the person who has injuries or damage or whatever back to the point right before that accident happened, to get you back where you belong. That is one of Farmers Insurance slogans, and they used to actually have a commercial about that. I think there were several different commercials about Farmers gets you back where you belong, and that's called indemnity. That's where the cost of the repairs has to be calculated, and the cost of the bodily injuries with the medical bills and the pain and suffering and all that stuff has to have a monetary value assigned to it, and then that person is given the money for that. So that's called indemnity. Get you back where you were. Compensation for the damage or the loss sustained. So there are other optional features of auto policies. The state requires that you have this indemnity we talked about. The state requires that we have this coverage for these damages to other people. If you're at fault, the state requires that you have certain limits of coverage, but you don't have to have anything else. So the state requires that you have $30,000 worth of coverage for the bodily injuries to another person, and a total of $60,000, so $30,000 per person, but a total of $60,000 for the bodily injuries in an entire accident. So you could have 10 people with $6,000 worth of injuries, or 2 people with $30,000, or 4 people with $15,000, but the most they would pay for everybody is $30,000 per person and $60,000 for the whole thing. And then $25,000 for property damage. So if you crashed into a house or a car or a bridge or a fence or several cars, the most that would be paid out is that $25,000. And then you would have to pay the rest out of your pocket. And if you don't fork over the money, what's going to happen? Of course, there's going to be a lawsuit and you're going to get sued. So we try to make sure that our clients don't get stuck in that position where they don't have adequate coverage to cover damage they could cause. So we recommend higher limits than the state minimum limits. Additionally, there's other coverage that you can have on your car. So if someone crashes into your car and they are at fault, their insurance would be fixing your car. Their insurance would be paying your medical bills. But what happens if the accident is your fault and your car is damaged? You can have additional coverage called collision coverage that will pay to fix the damage to your car if you are at fault. This is an optional coverage. You don't have to have it unless you have a loan on the car. The bank is going to require that you have this coverage in case you damage that car, because the loan is based on the value of the car. So if you have a loan, then you have to have collision coverage. There's another one called comprehensive or other than collision. So we call these comp and collision. The other than collision, that's going to cover damage that could happen to your car, like vandalism, or if someone steals the car. A big one around here is hail damage. So those things we can't really make somebody else's insurance pay for. So your insurance could pay for those things if you have comprehensive coverage, is what we call that. Damage other than collision. So some other features you can have, as it says on the slide there, you can have coverage that fixes the damage to your car if someone else is at fault, but what if they don't have insurance? Some people don't do the right thing and they don't have the right insurance, but they drive anyway. If that happens and they damage your car, You could sue them to get the money to fix your car, but how long do you think that might take? And if someone doesn't want to pay for insurance, I'm just guessing they probably don't have any money that you could sue them for either. So you'd probably, you can't get blood from a turnip, right? So you could also have a feature that pays for your bodily injury expenses if someone else is at fault, but they don't have insurance. So there's a way to protect yourself even from people that aren't doing the right thing. And the way that works is the insurance company goes ahead, like Farmers Insurance would go ahead and take care of you and in these instances, and then we would go after the other person and try to get our money back from them. It doesn't usually work out, but that's kind of the way it works, is we want you to be taken care of, and then we're going to go through the long drawn out process of trying to get our money back from the other person. So we do that. Another feature you could have is a rental car. Of course, if you damage someone else's car, we're going to pay to fix their car. We're going to give them a car to drive. We're going to pay them for any bodily injuries and time off work and stuff. But if you are at fault and your car has to be fixed, there's a feature where we'll pay for you to have a rental car too. And there are certain limits that you can choose. You can choose to have $30 a day or $50 per day or $100 per day to have a substitute vehicle. And most people just want something to drive around, and it's usually only going to be for a couple of weeks. The limit is usually 30 days. So there's a limit on that. But another feature you can have is towing. If your car breaks down, then we'll pay for a tow truck to come get you and tow you to the nearest repair facility. If you have broken, let's say you have a flat tire, or you have the keys locked in the car, or you need a jump start, that's called roadside assistance. And many insurance policies offer that as an additional option. Farmers Insurance does. And a lot of people really like that. It's very inexpensive. And so I always recommend people get it, even if they have some kind of other coverage, because seriously, it's like $1 a month. It's really inexpensive to have that. So the other thing that you could have as an optional feature is life insurance. So the way that works is, should there be an accident where you or someone in your family dies in a car accident, then there would be a life insurance payment to your family so that the family can, provide a funeral and pay any final expenses and things like that. There are many more features, too many to list. If you have curiosity about a certain feature, please call us. But there's so many more options you can add on to an auto policy to customize it and tailor it to what your needs are. I'll give you an example. There's even a feature you can turn on where the insurance company will actually lower your deductible if you get a broken window, so that it only costs you $100 instead of a $500 deductible or a $1,000 deductible. And we didn't get into deductibles today, but we will in the next segment of this video. If you choose to watch the next one, we'll talk all about deductibles. So at our agency, we say it's our family protecting yours. And we're a family business, and we care for one another, and we care for our clients just like family. And we want you to know that we're here for you. And yes, Farmers Insurance is a business, but this business is brought to the public by agents that are local people that care about their family and their friends' families and their neighbors. And we want to care about you too. And our website is iknowdean.com. You can go there to find out all kinds of information about insurance or to contact us. And one of our taglines is, because it's not what you know, it's who you know. And I want to get to know you too. If you have any questions, like I said, please call the number at the bottom of that slide right there. And stay smart.